Good afternoon, guys. I want to recap on my Tokyo session trading so far. I have all my strategies written on top of my trades here on TradingView for you guys to see. Overall, I was trading strategy 3 today. I had liquidity areas drawn out, but right now I have an indicator that I use to show me icebergs. So it actually works really well. The orange gold areas are buy zones and the purple ones are sell zones. However, if you are underneath a buy zone, it acts as resistance. So currently we have an overall strategy 3 and I traded with inside of that. Okay, so strategy 3 is we come down, we break a level, we retest, and then we put in lower highs, right? We're rejecting an area and we're bouncing down along a trend line. Okay, so I am anticipating, even with strength, if we retest this area, we should reject it and continue breaking lows, and I am going to trade it accordingly. So that's what this indicator is. It is called volume positive and negative levels by Chart Prime, and I really like it. Okay, currently we're in Tokyo session and the volume has started to pick up. When I started trading 2 hours ago around noon my time, this was down like 60% of the normal volume, okay? I only use the sessions to see what kind of volume we have trading actively on the session. Okay, so first and foremost, when I opened up the chart today, I saw that we had liquidity that was already pulled, low liquidity used. This is an order block on a lower time frame. And as we came up, we have liquidity, and an order block that we didn't interact with yet. So we may still go up there and pull. Okay, here we have liquidity, sell sides. We've got bottom side liquidity. And then I moved into the 1 minute and I want to recap on my trades. I also want to show you, I use 2 different things on MetaTrader, okay? And they are these 2 EMAs. Okay, so I've got a 10 and 13, and I've got a 30. The 10 and 13 is this. It's a volatility index on the trend lines, or I'm sorry, in the indicators in MetaTrader 5. And then this is just a simple moving average. This is adjusted to low. So not open, not high, not close, low. And the way I use it is when something is starting to trend down along a trend line, I want to look for buys and I want to look for sells so I can scalp it, okay? So the rules are pretty simple. As we move down and the bands start to open up a little bit, I anticipate that we're going to get a nice push back up to the top band. However, these bands were very close together, so I didn't mess with it. On the high end here, we can see that we were above the red, and again, these bands, because it's low volume, these bands are closed. In higher volume situations, they start to open up a little bit. So the rules are simple. When the bands are open, I am going to look for buys and sells in the opposite direction as long as 2 criteria are met. Liquidity has been pulled from one end or the other. So here we have pulled liquidity. I want to see a bull bar close above or at least 50% above the blue line. And I will buy, going for a 1-to-1, 2-to-1, somewhere in there, or just targeting structure. The reverse is the same for the red line. As we are above the red line, as we cross it and we cross back below, and I have a a bear bar, I will sell and I'll go for a 1-to-1, 2-to-1, or previous liquidity, which would be here. So here we get a bull bar, a full close above the blue, close this, and I want to target high structure, which we got up here. Flip side, we've got this, and then it comes down and crosses above. We look for a mean reversion, okay, and we get a sell side. Now, this isn't how I was taking the trades today. There is only one way I use this today, and it was like this. When you finally get a crossover, bullish strength, a run up, and this flushes back below both of these like this is a buy signal for me. Okay, counterintuitive. We aggressively push up, we interact with an area, and then the only criteria here is that we flush hard. Okay, we have to flush hard. If it crawls back down, no. Flush hard, I'm just expecting this is a correction. We pull liquidity, I buy on the bounce right here, my stop is below this. Okay, so liquidity is pulled on this, I buy here, my stop is here, and I look for a retest of the highs, which we got. Okay, anyways, that's how I use these indicators. This is a volatility index. The numbers here are 10 and 13, and this is the regular 30 moving average low. Okay, all right, let's get back into the charts and I'll show you how I was actually trading everything today. Okay, first trade was break even, second trade was loss. Remember, 2 losses, done for the day. So liquidity, 2 bars, I sell. Stop is up here, I'm going for like a 1-to-1. So initially, I'm going for something like this, okay? As it comes down and it gets close, and then my final target is always gonna be a pull on the second level liquidity. So here we have level 1 liquidity, this is level 2. So if I catch a trend, it should break the liquidity I'm looking at, and it should go down into a longer term liquidity, and that will always be where I target for my runners. Okay, and those are the levels I showed that I had drawn out earlier that I already showed you on the 15 minute. So as this pulls down and gets close, this yellow bar, I put my trade at break even, and it turns around. Okay, it pushes up and it looks like it's gonna break the high and continue higher. I don't like to chase this, but in my experience, if liquidity does not get pulled here and instead it turns around, there is a possibility that we just actually trigger an uptrend. Okay, so I went long here with my stop below liquidity. As this came down here and broke this low, I closed my trade out for a loss. Okay, then I decided strat 5, right? A head and shoulders. Effectively, we do have a head and shoulders, it's just a little weird, right? We've got a shoulder, a head, we've got a little pullback here. So as we broke this low, I decided to just chase this only a little bit, because I've noticed that when I wait for great pullbacks, they do not always come. And I actually got slipped out for break even on this trade on this candle, which is extremely obnoxious. Oh no, I'm sorry, it might have been this candle. I'm not entirely sure, but it ended up hitting my target. So I had initially moved my stop to break even when we started to really push these lows, anticipating a break. Okay, because it was so close, I did not take profits here. I was looking for an interaction with that step to liquidity. However, I moved my stop up to break even and I got slipped out on this candle. I was actually eating and in the kitchen and wasn't paying attention, and I came back and saw that I hit my target and realized I was zeroed out on the position, which is obnoxious. Okay, now this is strategy 4, right? We've got an order block with consecutively lower attempts and we're running down a trend line. We break it, I push up, it pushes up, I see that it comes down and I'm like, not gonna trade this, and then immediately corrects. So I buy. And this ended up coming through and breaking this level and actually taking out this liquidity. When I was looking at it, I didn't really think that was gonna happen, so I just targeted this and I walked away. And when I came back, it had broken through, come up here. No, I didn't walk. Okay, so I came up here, right? I didn't put a target in or something like that. Maybe I was looking for it to go a little bit higher. Okay, I think I was actually putting my main target at liquidity sell side, because I ended up closing this out for a decent profit. As it pulled up here, I closed the majority of my position and I moved my stop to break even. And then I wasn't paying attention, I was away from my computer and my target was here, stop at break even, no worries. It actually swept this liquidity and held it and started to dump down. Okay, so I ended up getting out for break even on a big portion of the trade, about half the trade. Then liquidity is here. We have 1 leg up, 2 legs up, 3 legs up. It failed, pulled underneath this, push, push, and then a nice V shape, push up. So as we pull down into the mean, I buy with my stop underneath this, and we push up aggressively, push up, and then we finally break it here. As we're breaking and moving into this, you can see it didn't hit my target. I move my stop to break even, and I get stopped out for, as it comes down like this, I close my trade out for a small win. And it ends up pushing up, and I realize that this might be the final dump. And the reason I'm looking at this is because we have structure here and an aggressive push up and an aggressive sell off, an aggressive push off and an aggressive sell off, an aggressive push up. And I realize that we are in some liquidity right now, and I think that we're about to get a big move. So as this bar wicks down and this pulls up into the wick, I sell with my stop above structure, and it immediately pulls down and takes out this liquidity. Now I'm anticipating it's going to take out secondary liquidity, which is my primary target. As it comes into here, I take profits here, and I take profits here, and my stop is now at break even. Those are the trades on the day, and now I am hoping that this fails and it falls all the way back down into this order block liquidity, and this alert is my target. Okay, it's 740. These are pretty strong structural points, and liquidity has already been pulled, so I do not know if we'll need to come back down here again. So right now, my target is here. However, given the way that this trade is working out right now, this looks like it's about to break out and go back up, right? Strong sell-off, it's walking back up. We've got a breakout bar. This looks like some market manipulation. However, we are pre-market London, and I do not want to take any more trades. So at the very least, I may close my trade now and walk away with a decent profit on the day. But currently, I am up about $1,000 on the day. I have had one loss and 2 or 3 break evens. I think one smaller win, and then this is the bigger win that I'm in right now. Okay. Anyways, guys, this is a Tokyo session recap. Using my strategies. You can look at all my other videos where I talk about all these strategies extensively and how to identify them. You can use all the indicators that I use, and I hope that you can get profitable. And yeah, we're in this together. It's a tough game, and it's not for the weak of heart, that's for sure. So just keep at it, guys. Don't quit, don't give up, keep learning, and we'll get there. Okay, I love you. Peace out. All right, guys, I just finished up trading London session, and it was a major bust. I lost today. And here's what happened, and here's why I lost. First and foremost, we broke down here, and I did hit my full target on this, and I was up 2% on the day, a little bit over. We pulled liquidity, and on this, I bought on this break of liquidity here. Liquidity got broken right on this level, right here. And on this bar up, I bought again, and I moved all my stops up here. As this pushed up and made its second attempt, I moved all my stops to under 1.057, so right here, and I got stopped out. So for this, it was like break even-ish, and then this one was a loss. Then it fell down, and I was anticipating that at some point today we were going to come back up and interact with this rejection area. Right, boom, boom, 1, 2, 3. So my target is 740 right here. And realistically, because this is old liquidity, I was most likely going to take my profits at 700. So I was looking for a bounce, and I was trading 1-to-1s because I don't want to get stopped out trading pivots on a fall, right? Because you trade a pivot, you get stopped out. Bounces, stopped out. Bounces, stopped out. I don't want to be in that situation, so I have wide stops. So as this bounces up and pulls up, right, comes down here, I see this green bull bar and I buy. And then I move all my stops up to here. This is pushing, pushing, pushing. I should have closed this for break even and then moved my stop to break even here, right, on this trade. Instead, I took a large loss on this and a small loss on this. And then I was actually down $450 on the day. So it's down like almost 1% on the day. And then, I don't have it mapped out here, but I took repetitive small losses, which actually added up. So, stupid situation, right? This is strategy 7, pushed up, looked pretty decent, swept it, pushed up. I bought, immediately stopped out, full loss. All right, so that was like this. I got in like somewhere around here, stop here, same target, like way up here somewhere, okay, right here, stopped out. Again, pushed up, strategy 7, pushed up, and I was anticipating again that we would go higher. And after this loss, I realized that I really needed to wait for a higher high break. So after taking 2 losses, I took this trade. And this trade actually made me money, but I only took it on one of my accounts because I was out of the house. So I took it on my cell. And it made me money on my cell, but it lost me money on my desktop. Because I didn't take this on my desktop. So I was down on my desktop, up on my cell. So as this pushed and broke highs and broke above here, I took a wide entry, hoping that we would correct back above this, and I almost got shaken out here. In fact, I did take a couple losses here on my desktop, because I came back and I saw, okay, we've broken above, and I saw this correction under liquidity. And because I am an idiot, as we broke and corrected and we walked up, I bought here and I put my stop here for a push into the highs here. And I got stopped out by slippage right here. Because there's a 5-point slippage on my brokerage, I got stopped out here for another 1% loss, which is ridiculous, but this is what happens sometimes when you're trading 1 minute. You are getting laser entries, and in reality, sometimes you should lose a little bit larger of a stop. Unfortunately, because of broker slippage, this pull down stopped me out and then hit the target. However, on my sell, I did get a retest of an order block, and I'm going to show you what I'm looking at here. We ripped this order block, and I am only looking at this for strategy number 3, right? Bounce, 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 retest, fall. I realized after we started selling off here that we are actually rejecting this old order block, and we are clean rejecting it. So I could have entered, and this is a great example right here, a failed, I mean, this is again strategy 3. Right? We have an order block, rejection, 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 lower, 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 right? An aggressive correction right back into it, and a failure. We could have gone short here, stop above the OB with a target of a break of the lows, and that would have been an outstanding trade, because I do think that we are now going to get a break of the lows. But I'm not in this trade, so no worries. Anyways, emotional recap. Did I overtrade today? Yeah. Yeah, this was a very ambitious trade here. I should have used a wider stop. I didn't mind that I used 1-to-1s on these, where it was something like this. But, you know, I've noticed when I use 1-to-1s and then I get corrections that I move my stops up, that I do tend to get stopped out. Should I have been going for maybe 1-to-1s or 2-to-1s and taking 50% off? And then maybe moving my stop to break even, just because we are in a downtrend market and I'm waiting for that uptrend. Am I going to get chopped up waiting for it? Possibly. Has it happened a lot in the past? Yes. So I think tomorrow and the next, well, from here on out, when I see these downtrend markets and I'm really expecting a pull in liquidity and correction, and I get an aggressive correction, I think on the 1-to-1, I think I'm going to stay short biased from here on out until I get a break. Because yesterday I caught a bottom and it just flew. You know, it went up pretty much all day long until the next trading session. And today I was trying to catch bottoms and it just was not working. But let's replay this and say that we were going for a 1-to-1 on this trade. We would have gotten it. So let's say I take off 50% on the 1-to-1 and then I continue targeting the highs and I move my stop up to, let's say, just here below a reasonable pivot, and I get stopped out, and instead of walking away with a 1-to-1 profit, I walk away with a small profit, but it's still a profit nonetheless. And what about here? As it moves in my favor, I go, okay, I'm going to say, but maybe this is my stop, and what's a 1-to-1? Right here. So let's say I'm going to just take 50% of my profits off, and I'm going to move my stop up. And it turns around and stops me out, effectively making it a break-even trade. Here, again, I have the 1-to-1. I look at this bounce, stop, target is a 1. Right? I would have made money here if I had just done this. You know, move my stop to break even, or at least just take a 1-to-1. We're in a downtrend market. We're not really breaking higher highs. I think I'm being ambitious, right? I keep getting stopped out. So maybe instead of, you know, keeping a full target, in these downtrend markets, I go for the 1-to-1 and I keep my stop here. If it comes around and stops me out, it's a break-even trade. If it ends up really, really hauling ass and going all the way up, well, then I think we'll notice that it's actually making an attempt at this point. Because, for instance, here, we're trending down here. And then when we broke out and retested and continued, this is a reasonable attempt to continue higher. I can take a trade here, and as I get the 1-to-1, I notice that it's making an attempt to break these highs. So perhaps I move my stop up to break even and wait. And as it comes back down, maybe I don't get stopped out, but maybe it does continue up like it did here, and it breaks the high. And now I have a nice confirmation. As it's breaking the high, perhaps I go, okay, I'm going to wait for this to interact with an order block, because now it looks like it's actually heading in that direction, right? I think that the problem with young traders or new traders is you're always looking for the perfect risk to reward, and there really isn't. You have to interpret the market. Here we have a great liquidity pull and a continuation. This is a bread and butter setup, and I shouldn't have gotten stopped out of it, but I used too tight of a stop. So maybe instead of using really, really tight stops, I anticipate that we're going to bounce. When I see a bounce, I move my stop up and I take profits at 1-to-1. When I see that it's created a new high and pulls back, I can add for a continuation. Let's see if that would have worked. Right, we break the high, add for a continuation, bounces, fails. I would have taken a loss, but I would have taken some profits. Here, pull down, aggressive push up, take profits, pulls liquidity, bounces up, I buy, fails, I take a full loss and a half loss. So I would have still lost money on both of these. Here, same situation, no pullback, just full loss. So, assuming that we're losing 1% on each of these trades, we lost 1/2, a full percent, 1.5%, 2%, and then we made a trade win here, and we lost 0.5% here. So if we are risking, and this is a, let's say, 2-to-1, we lost 2%, 2.5%, and we made 2%, and then we lost about 1% here. So on the day, we've lost money. So on the day, I'm down about 3.5%. But yesterday I was up, I think I was up 6% yesterday, 6 or 7% yesterday. And now we can see what has happened. We've completely tanked, and we moved right into the primary order block that I was watching. And if you look at this whole thing, you can see it's just ripped liquidity, dropped, ripped liquidity, retested, dropped, retested, dropped, retested, dropped, dropped, retested, dropped. So this is just a grinding down situation. Euro USD, what do we think is going to happen next? Do you think we're going to continue a downtrend? All right, where are we now? Ooh, we are like out in the middle of the ocean, dude. Okay. This is crazy. So literally on the 15-minute, we were doing the exact same thing, exact same pattern, right? On the 15-minute, we were doing the exact same pattern here. Boom, 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 drop. Boom, 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 drop. So I think we're going to come in for a downtrend, and this is going to be a seller market for the next few days, and we're going to come in and interact with these lows. Order blocks on the day that we could look at for the next few days. Let's go on daily because everything's so far out. We've got an order block here, right here, ding. We have an order block here. We have an order block here. Lord, there's quite a few of them on there. And we've got this one right here. So we could watch these and trade them on a higher term time frame because we're mapping this on the daily. I would look for entries on the 15-minute. All right. So the way I do it is like I divide by 60 or something around there. So if I'm trading on the 1 hour, my entry's on the 1 minute, 60. So I'm trading on the daily. I'm sorry, if I'm charting on the daily, then I'm going to enter on the 15 or the 30. So where is liquidity? We break this liquidity and we pull down into this order block. We could potentially look for an entry here for a retest of the bottom side liquidity, which would look something like this. And then a further correction up into, we can tell we have an order block here. If you can see, put an order block here. Let's delete this. This is irritating. Here, ding, 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 and here. So we could look for something like this. Anyways, guys, it's late. I'm going to bed. We'll keep updating all these trades and show you my journey to becoming a multi-millionaire from day trading. Until next time, peace out.